Assalamualaikum warahmatullahi wabarakatuh to brothers and sisters. Can you hear me? Yeah. Okay.
Yes.
So today, what I'm going to share with you would be two more products that is on murabaha as well as ijara. So first on murabaha. So again, I would like to show you the diagram where we are. So last week it was on musyarakah and mudarabah, which is on this side, the two. Today we are going to talk on leasing as well as the murabaha. Part of murabaha is the BBA. Salam and istisna will be next week, yeah, inshallah. Okay, so now if you talk about financing of services, then we are talking about ijara mutaya bitamlik or IIIT. As far as the financing in the exchange of goods, we have products like murabaha or buy vitamin ajil. Just a slight difference between these two. Later we will discuss. And then you have salam and parallel salam, istisna and parallel istisna. This is more for construction. This is for agriculture. Okay, so there are basically two types of murabaha. So murabaha, the standard that AOFI has issued was originally on FAS2, but that standard has now been superseded by FAS 28, where FAS 28 actually combines FAS 2 and FAS 20. 20 on deferred sales, 2 on murabaha. But basically, when we talk about murabaha, there are two types. One is murabaha, just murabaha. The other one is murabaha to the purchase order. We just, in a little while, we look at the differences. So basically, when you talk about murabaha, it's just a sale of goods where it is cost plus an agreed markup, and the cost is indicated to the buyer. So it's a markup. So the purchaser should be informed of his cost of purchase and the profit amount. I think in this way, Islam is very unique because when you agree to purchase, if you are told about the profit that the seller is making, if you agree at that point, that means the contract is completed, and therefore you cannot go back and say, oh, I did not agree, because you are told about the profit, and that means the cost and the markup. Okay, so in murabaha sales, the payment can be immediate or deferred in lump sum or deferred in installments. Normally when you talk about financing, it's always deferred and deferred in installments, yeah. But as far as murabaha is concerned, the payment can be immediate also, and it can be deferred. So basically the steps are, usually the bank would have in its stores those goods that they want to sell. Okay, so the bank buys goods from murabaha from a vendor and pays for it, and then enters into a murabaha contract with a client or a customer and delivers the goods, and the customer may pay the bank immediately or installments. Usually for banks, it will be paid in installments, yeah? Okay, so if you talk about a diagram, we talk about the Islamic bank and the vendor, original purchase of the items, and then sells it to a customer. So the customer is told about the cost plus predetermined markup. So, okay. So murabaha to the purchase order, there are three parties. If you look at this murabaha, the normal murabaha, you only have an Islamic bank and customer. Of course, there's this other party where you talk about the vendor. This is, even if you don't show it, you know that the Islamic bank would have to purchase the item that is going to sell to the customer. But one thing that is important is the fact that the bank must have the title to that property or to that item before it can sell. And in Islam, if you don't own that item, you cannot sell it, yeah? Okay, so in the case of a murabaha to the purchase order, there are three parties. The customer is actually the orderer, the purchase order. So informs the bank of the item that he or she wants, and the bank will buy from a vendor. So, and after that, the bank will sell to the customer at a markup. So this is the originator is from the customer himself or herself. Okay. Okay, so basically these are the four steps. The customer requests the bank to purchase, the bank buys, and then the bank executes a murabaha contract, and then the customer pays for the goods on an installment basis to the bank. Okay. This is basically explaining about when do you recognize that murabaha financing lah, yeah. So in the murabaha to the purchase order, because the purchase order is the one initiating the transaction, that means the purchase order indicates to the bank that he or she wants to purchase an item, yeah. So it can be binding or non-binding. But it is strange though, if we say that it is non-binding. The fact that it came from the purchase order, it should be binding, yeah. But in Islam, we say that it may be non-binding because we are not sure. Okay, non-binding because the bank cannot sell what it does not possess at the time of making the promise. So, and then the second part is that the goods may be defective, deficient, or not necessary when it is delivered. Of course, this will not work in practice, because where banks are concerned, they will have a battery of lawyers where they will look at all these aspects. Definitely it will be binding. If you ask the bank to purchase something, obviously you have to buy it from the bank, yeah. So therefore, there is no such thing as non-binding, I think, in practice where banks are concerned. But some fuqaha was saying that actually the bank cannot have a binding contract because it does not possess at that time when the contract to purchase from a vendor was executed. Yeah. Okay. Then how does a bank protect itself? So there are two types of deposits that banks may impose on the purchase order. One is hamish jizya, just to indicate to the bank that you are serious. The bank will ask for a certain sum of money. So the difference between hamish jizya and urbud, we will discuss in a little while. So what is hamish jizya is just an amount paid by a customer to the Islamic bank to indicate his or her seriousness in purchasing that item, yeah. So, but there are two issues here. If the contract is binding, and if the purchase order declines to take the goods, the bank will have to sell it. So if it is binding, when the bank sells it to another customer, if the bank incurs a loss, it will make good that loss from that hamish jizya that was paid by the customer. If it is not enough, they can even they have to ask from the customer. Okay, but there are some contracts which are not binding. So if it is not binding, the hamish jizya is paid back to the purchase order if the purchase order so decides not to purchase. Yeah? Okay, so let's just look at this short example. So if you have a client having a non-binding promise to an Islamic bank to buy a car, and if the Islamic bank has already bought the car for 30,000, or that's very unusual, it's too cheap, 30,000, and has paid hamish jizya of 5,000. So if the car is delivered and ABC has decided not to purchase that car, and if the bank sells it for $28,000, 20,000 ringgit in cash, how much of the hamish jizya will be paid to ABC? It will still be 5,000 because it is non-binding. But if it was a binding contract, then the bank will return only 3,000. The fact that the bank lost 2,000 means that the bank can offset against the hamish jizya that was paid to the bank. So the bank will return to ABC only 3,000. What if the bank sold the car for 22,000? So there was a loss of 8,000 because the Hamish Judea is only 5,000. So 3 more thousand, because the loss was 8,000 minus the Hamish Judea of 5,000, the 3 more thousand the bank can claim from the client, ABC. Okay. So Urbun, this Urbun is a type of deposit where it is that normal deposit where you pay when you have, I mean, if you want to purchase a house, you pay a 10% deposit. If you do not continue with the purchase, the bank will actually confiscate it, forfeit the Urbun, yeah, the normal deposit. Okay, but if you what do you call it? If you go on with that contract, you will just have to deduct the amount of financing from that Urbun. So if it's 10,000 and you wanted financing for 100,000, now your financing becomes 90,000. Okay. Okay. So for measurement of the Murabaha financing assets, the inventories, because banks, it is not normal for banks to actually buy the cars and then keep it in its stores, right? But assuming this is the theoretical perspective where you have inventories. So for inventories, whatever items that the bank buys to sell back, at the time when it was initially purchased, it should be at cost, but subsequent measurement, it should be at lower of cost and net realizable value. Then the standard has some provisions where it says, if it is a binding promise and there is a customer that will be buying the item or the inventory at a price that is higher than cost, then you will have to value it at cost, irrespective of fluctuations in fair value of inventories. So they are saying that if you know that there is a customer and that is a binding promise who will be buying the inventory, then for subsequent management, before the contractual agreements are what do you call it? Completed, you will have to value the inventory at cost. If it is a non-binding promise, just value it at lower of cost and net realizable value. So this is in terms of measurement. And then the standard is quite, what do you call it? Quite clear as to what happens if there's a discount. So if discount after acquisition, they say it should not be treated as revenue, it should be treated as a reduction in the cost of the goods. And then upon financing the customer, Murabaha receivables should be recorded at the face value, the cash equivalent value, whatever financing that you have agreed to provide to your client. Okay. If the financing period is less than one accounting period, it's easy. So you just recognize the profit in that accounting period. But if it settles more than one accounting period, then you have to have a method to apportion the unearned income. So they say you can use two methods, the accrual basis or the cash basis. Normally one would use the accrual basis, yeah? But I guess the cash basis is also something that we should actually look at it seriously, because cash basis prevents the issue of gara from happening. So that's why if you receive cash, then you recognize it as profit, part of it as profit or the income earned. But if you do not, then you don't do it. However, the normal convention is to use the accrual basis. So irrespective of whether you have received the cash, when you know that payment is due, you take up the profit at that point of time. Yeah. So this is just a principle of matching expenses with income. Okay. And then they also mention about accelerated payment. If the client pays you earlier than they should, then you should actually offset some of the profit that you have already calculated to earn and give it back to the client. Yeah. Okay. Then the standard also mentions something about if you charge a penalty for late payments or non-payment for certain periods, then that amount should be given to charity. That was the initial policy. But now Bank Negara has one policy document pertaining to this, where it allows 1% to be treated as your revenue as compensation, but the others will be treated as penalty. Any penalty cannot be treated as the bank's income, but be treated as something that you are going to have to pay to charity. Yeah. Okay. So this is simply saying that any non-payment of installments, it can be either treated as revenue, which in the case of Malaysia, 1% of it, the balance will go to a charitable account, a charitable fund. Okay, and then this is in the case of insolvency, the bank has no authority to ask client to pay for penalty. Okay, this is what I mentioned, the ta'widh and the garama. The garama is the penalty. The ta'widh, 1% of the arrears can be treated as compensation for administrative charges. So they would, the bank would treat this as their revenue. Whereas this one, they would have to credit it to a charity payable account and eventually to distribute it to charities. Yeah. So in the policy document by Bank Negara, they are very clear in setting out the calculation of this ta'widh and garama. So if the average financing rate, they say is 6%, only 1% is for compensation. The balance should be penalty. What is interesting is, I think, to find out from banks, do they actually charge more than 1%? Because if they do charge, I think it involves a lot of administrative work, where you have to actually account for it and then making sure that you actually distribute to charities. So whether banks want to do that, I'm not sure. So that is something that one has to research on. I think this is a very interesting issue to be studied. Yeah. So this one is again about the garama, the penalty, the Sharia committee approval, the amount to be given to charity, and the amount that is going to be treated as your revenue. Okay. Profit allocation method, you usually spread it over the contract period. What do I mean by this? If the financing is for 4 years, then if the profit on that, the murabaha contract, the profit is say 40,000, so you divide it by 4, so it'll be 10,000 a year. Yeah. Movement of receivables and deferred payment sale, including deferred profits and provision for doubtful debts. This is talking about the deferred payment, how much of it is actually deferred profits, and then at the end of every financial year or accounting period, you must actually value the murabaha receivables. So if there is an estimate, or if they anticipate that they cannot collect, so there would be provision for doubtful debts. Yeah. And the disclosure requirements here is talking about the financial policies on deferred payment sale, as well as fair value of the collateral of the sale. So this is talking about what was sold, that is the collateral. So if there is non-payment of installments, that is the item. If it is a property, that is the item that the bank is going to take back. Yeah. And then in the disclosure also, whether it has applied the option to revoke contracts in the purchase of assets available for deferred payment sale. So this is something that we don't normally see, yeah? But that is what the standard has in its standard on FAS on murabaha. This is just a short example. If you're talking about an asset that the bank has, and the client wants to purchase. The bank sells it for 120. If the repayment period is 4 years, then the journal entries would be, when you set up the financing, you would debit the Murabaha financing, and then you would credit the cost of that asset, which is 80, of cash if we are giving cash. But normally, theoretically, what the bank should be doing should be to credit an asset account here, because it is presumed that the bank has already in its possession that particular asset to be sold. Yeah. So, but you notice that normally we put cash here because this is showing like you are actually selling cash, which is not the intention. The intention is to sell an asset. Yeah. And then you have the 40 as the unearned income. So this is what I meant by the profit allocation of this 40. You will spread it over 4 years, because according to the repayment period, it is 4 years. So therefore, you will spread it over 4 years. And the installment that you receive, cash, and then it will reduce the Murabaha financing account by 30. And then the unearned income, we will always take from here, take it and transfer to the P&L every year, be 10,000 or 10 million, whatever, to the P&L account. Okay. Okay, that's Murabaha. BBA is also part of Murabaha, but by Vitamin Ajil, there was a lot of controversy as to how Malaysia has practiced this by Vitamin Ajil, because it was said that Malaysia, or rather this by Vitamin Ajil, is the buying and selling to the same party. So normally last time we had this by Vitamin Ajil for property, where the bank buys the property from the client and then sells it back to the client at a price which is higher than the cost. So that is something that is not acceptable to some scholars. Yeah. So you will find that this is slowly being phased out by Islamic banks. But although it's Bank Islam, when I look at the accounts, they still have this particular item. Yeah. This often includes a feature of Murabaha where you have cost plus profit, but it is usually, no, not usually. BBA is one that always differs in its payments. Yeah. Whereas the normal one, Murabaha, we say that you can actually pay immediately. Whereas for BBA, it is always deferred. Yeah. Okay, Tawaruk. Now, this Tawaruk is a financial instrument. But I just explain it a little here. Now, Tawaruk is basically if you have a client wanting $1,000, goes to an Islamic bank, what the Islamic banks do would be to sell him a commodity for $1,200. But he needs only 1,000. But this 1,002 that the bank sells to him, he can pay over, say, 4 years, right, in installments. And having that commodity, he will resell to a third party, because his intention is to use that $1,000 cash. He doesn't want a commodity. But because in Islam, selling is allowed, but cash, like loans, at this 400 profit, we say, if it is cash, we say it is interest. So therefore, that's not allowed, riba. So what happens is that that commodity is being sold to Fatima, third party, for 1,000 for spot payment. That means on the spot, Fatima will pay 1,000 to Ali. So Ali gets the 1,000. Ali pays $300 to the bank. It's over 300,000, whatever, over 4 years, right? Then we say that because there are two transactions, sales transactions, that is allowed in Islam. But to some, it is a backdoor to riba. Because for the fact that Ali didn't need the commodity, but he bought it just to sell it back to get the cash, right? Okay. Okay, so thus buyer has a contract for a murabaha transaction, and later the same transaction is reversed. Sometimes this is called a reverse murabaha. So both transactions, because these are sales transactions, they are Sharia compliant, or these are Sharia compliant. So if you look at, I'm not sure whether you can see it, it's the same, but this is organized tawaruk, meaning to say the bank will act as an agent. So if the bank, when the bank receives customers' requests, say for $1,000 of commodity, the bank will buy from a broker that commodity and then sells it to the customer at 1,002 as what I have given just now, 1,002. Now the customer doesn't need it, but the customer will not have to sell it because the customer will engage an agent to sell on his behalf. So this is organized tawaruk. So the bank will actually sell to another broker. The bank cannot sell to broker A but sell to another broker, broker B. These must be separate parties for it to be legally allowed in Islam. Yeah. So therefore, so it works the same way, except that these are all organized by the bank, right? The institution that will be providing the customer with the financing. Okay, is a tawaruk a controversial product? To some, yes, it is, because the intention of the commodity purchase is not for the buyer's use. The certain scholars believe that the transactions are not Sharia compliant. There is an absence of real economic activity, which to some it creates riba. To some also this is the backdoor to riba. Now scholars who accept this contract as valid note that it is based on two valid legal contracts, the sales contracts, which I have actually mentioned. Okay, so that's on tawaruk and murabaha. Now next, but interestingly, FAS 28 does not deal with tawaruk. So they are going to issue another standard on on tawaruk in particular. Yeah. Next, we go on to the ijara. So if I can show you the diagram again. So ijara is here, leasing. There are two types of ijara. But one thing that Islam doesn't have is on financial lease. Although to some, this operating lease with the transfer of ownership may look like a finance lease, but it is not actually. It is just operating leases. Interestingly, the distinction between finance lease and operating lease is no more in MFRS or IFRS 16, the new leasing standard, conventional leasing standard. They have actually not distinguished between finance lease and operating lease. So it is just like us here, as we have operating leases, and one ends with ownership, which we call ijarah mutahiyah bitamlik. Okay, so this one is taken from the old standard, FRS 117, where a lease is classified as a finance lease if it transfers substantially all the risks and rewards incident to ownership. So like I said, now the new standard on leasing has done away with the definition of a finance and operating lease. Otherwise, it is an operating lease. So the substance rather than form of the contract distinguishes finance from operating leases. Okay, later on we learn about how in Islam we account for such leases and how conventional leasing accounts for that transaction. Yeah. Okay. So the word ijara comes from the word ajar, meaning reward or wages for work done or services rendered. The technical meaning in fiqh is contract for hire of persons or services or the usufruct of a property or an item, an asset. So from the Islamic banking point of view, is this the leasing contract of land, property or equipment which are leased to a client for a stream of rental payments. Okay. So ijara is the ownership of the right to the benefit of using an asset in return for a consideration. So this is actually talking about the user right. You have the right to use that asset. Yeah. So the transfer of ownership of a service for an agreed upon consideration. So like rental of fixed asset, rental of a package of services. So the elements, normally you have the offer and acceptance, and then you have two parties, the lessor and the lessee, and the subject matter of the contract. Of course, it should be noted that the benefit from use of the asset is a subject matter of the contract, because it is the element to be satisfied in return for the rent. So that's why they term it the usufruct of that asset, benefit from use of the asset. So hence, it is the benefit of using the asset which is guaranteed rather than the asset itself. So what are the lessor's obligations? Of course, making the lease asset available, guarantee in respect of defects, maintenance of the lease asset. Lessee's obligations, utilization of lease asset according to the contract. Of course, the rental payment, and then responsible for operational expenses. Just like a house, is it that you are responsible for the normal operations of the house, like the gardener perhaps, yeah, the light bulbs. But like if it is leaking, perhaps the lessor would have to be responsible for that. Okay, so ijara financing, there are two, operating ijara and ijara mutaya bitamlik. This is also operating ijara, but this one, the ownership is transferred at the end of the lease period. Okay, so ijara mutaya bitamlik, when the title is transferred, the title can be transferred at the end of the period by gifting it, the lessor gifting it to the lessee, or the lessee pays a small price, or within the lease period, you pay the equivalent price because you do not want to wait until the end of the lease period. The other one is a gradual transfer. This is like musyarakah mutanakisah, where you buy a portion of the asset during that lease period. Okay. Okay. So the standard FAS 8, now there is a new exposure draft. So it is not yet a standard. The new ijara standard or the exposure draft, actually it is quite similar, or it follows IFRS 16. So it actually talks about the right of use, and it actually talks about more on how the lessee is going to account for the particular asset. Yeah. So recognition of ijara asset upon acquisition. So this is all in the standard. So measurement of ijara asset at historical cost. And the depreciation is borne by the lessor. This is very interesting because in conventional leasing, the lessor does not take into its books the asset that has been leased. If it takes, or rather it is like a finance lease, yeah? But for now, the lessee has to, for MFRS 16, the lessee has to take into its books the assets on the asset side as well as the liability side. That is the new standard, yeah? So presented as investment in ijara assets. So what they're saying is that before you lease the asset, if this you are a financial institution, when you buy, say, a property, you would have it as investment in ijara assets, and after that, when you lease it out, then only you have ijara financing. Okay. And then they say ijara revenue should be allocated proportionately to the financial periods in the for the period of the lease. And then ijara direct costs. Direct costs are costs like capital costs. So these are included in the cost of the ijara asset. Repairs undertaken by lessee with lessor's consent is an expense in the lessor's books. This is actually depending on the contractual terms of the lease. So if there are expenses that the lessor has to bear, so even if the lessee pays for it, the lessor has to take up in his books. Now, when we talk about counting for Islamic banks, we are talking usually on the part of Islamic bank being a lessor. this is basically what we need to pay particular attention to is the fact that in Ijara accounting, the lessor actually books in the assets in its books. That means they account for that particular asset in their books. By so doing, they have to actually account for depreciation. At the end of the year, they account for depreciation. For the lessor, what they put in the P&L is just the rental that they receive every year. So they will take it as their revenue. Yeah? Okay. So that's Ijara Muntahiyah Bitamlik, asset reported in lessor's books and depreciated. Maintenance cost borne by the lessor. Ijara revenue allocated proportionately to the financial period. Okay. Whereas the finance lease, if you talk about the finance lease in MFRS 117, it says here that it will not be reported as an asset, but just as a receivable, not as a fixed asset. So therefore, there's no depreciation. Okay. So I guess in conventional leasing, what they're saying is that they're using the concept of substance over form, because for all intents and purposes, the asset is deemed the property of the lessee. That's why the lessee would account for it in their books, not the lessor. Okay. But again, last time the operating leases, yeah, okay, operating leases is the same, yeah. Okay. Next, we talk about ITAP. This is special. In Malaysia, we have ITAP Al-Ijara Tama Al-Baik. So we call it ITAP. It refers to two contracts. One is hiring and the other one is purchase. So in ITAP, there are two contracts, and they actually by right, it should be first one contract. So I do not know if Faisal is there. Faisal can actually comment on this. By right, it should be a hiring contract, and then at the end of it, it's a purchase contract. But I think in practice, what they do is they have you sign for both. So therefore, at the end of the period, it is yours. Definitely is yours. I'm not sure whether this is really the correct way to do, but that's the business way to do it, because you don't give the option to refuse on the part of the lessee. By right, you should give that option. Sometimes after 10 years, you do not want it. But it'll be difficult, you know, because a lot of ITAP are for cars. So it'd be difficult if the lessee say, no, I don't want to purchase. So therefore, you better, they use actually in Malaysia, they use the Hire Purchase Act to execute this. So that means you hire and you must, yeah. Okay, sorry, is it that time yet?
Not yet.
Not yet, okay. So, all right. So this is what Malaysia is practicing, yeah. Okay. So the dealer sells the goods to the finance company, and then the finance company will then give the cash price, less the deposit that the buyer of the car has paid, and then after that, the buyer of the car will pay in installments to the finance company, yeah. Then upon settlement of hire rentals, the purchase agreement will be executed automatically, meaning to say they actually signed it together. Yeah. Okay, so this is slightly the differences, which is not much of a difference actually, except that it used to be ITAP being more popular than the conventional hire purchase, because they were charging just like 1%. But now I think they have charged equivalent about 2.5, whether it's conventional hire purchase or Islamic ITAP, they also charge the same amount, yeah? Okay. Of course, again, when you are leasing something, the lessor must ensure that you are not engaging in activities that are not allowed in Islam, yeah? Okay, and this late payment fee is the same that I've mentioned, that this is normal hire purchase, because we use the Hire Purchase Act of 1967. So I think there were talks about having an act that is special for ITAP, but it has not materialize at this point. Okay, so a little bit about the financial statements. This is Bank Islam financial statements. So if you look at the financing and advances and others, this is where you have the musyarakah, if they have mudarabah, and then they have, like today we have ijara financing and we have murabaha financing. So this is how much for the group and for the bank itself, for Bank Islam. Then let's look at the notes, what they have. So under, by type of Sharia contract, under financing and advances, if you look at the total here, if you can see the total here is 45 something. My God. Okay, about 45,680 in 2018 for the group. This is for the group. Yeah, this is for the group and the bank. So you have the total, and now they actually show you of those financing. I mean, what is it made up of? By vitamin ajil, and then they have murabaha, then they have by al-dain, by al-ina, at-tawaruk, ijara, muntahya, bitamlik, aitab, they have istisna, they have ar-rahnu. So these are the contracts that Bank Islam has. Okay, let's look at Bank Bahrain Islamic Bank. Bahrain Islamic Bank, you have financing assets and you have ijara, muntahya, bitamlik, and ijara rental receivables here. And if you look at the notes, under financing assets, you have murabaha, musyarakah, and for theirs, because the lessor actually books in the assets in its books. So therefore, you have these properties, aviation-related assets, and they have the depreciation because they are owners of these. So they depreciate these assets. So because they are following AOP. Okay, so that's my discussion on ijara and murabaha for tonight. So if you have questions, I'm not sure if Dr. Noraini is here. Dr. Noraini may want to answer the questions. Okay, thank you, Brother Sharan. I pass it to you now.
Okay,
I pass the session to you.
Thank you so much, Prof. Please raise hand, and then we can also take from the chat. Now from Sister or Brother Hafsat. So if that is the case, the money added by the bank based on agreement between the Islamic bank and the customer is not a riba. So what should we call it? Is it a profit or interest? This is in the middle.
Okay, for which particular example? But definitely it is profit. If you talk about Islamic banks, interest is a no-no. You cannot have interest there. So it is a profit.
It's from Brother Aliyu. What would be the case when the leased object got missing or stolen in the hand of the lessee, though not out of negligence? Who would bear the loss?
That is a very interesting question, but I am very, very sure the bank is not going to bear that loss. It's the lessee who is going to bear that loss. I mean, it depends on the contractual agreement, you know, because if the bank does not protect itself, there is going to be a lot of abuses about the lease asset. This is my personal opinion. So I'm sure in the contractual agreement, they would indicate what is going to happen, you know, who is going to bear. But again, you know, I'm quite sure negotiation is there. There's room for negotiation, you know, whether it's genuine or it was negligence. So that has to be determined. Sometimes if it's an item that is very large, I guess the court of law will determine whether, you know, the property should be, I mean, the loss should be borne by the bank or the lessee or both. But it's, I think it's an interesting question for a banker to answer, if there's a banker.
Okay, from Brother Afrad. Why penalty in the late payment of murabaha in ijara should be given to charity? If it is for charity, why should the bank make it an obligation for the customer?
Yeah, okay, that's what I said. That I have a feeling a lot of Islamic banks are only charging 1% for their compensation, because then they can book that as their revenue. But like I said, if you have above that and you have to account for it, and then you have to make sure that you distribute it to charity, it may be a lot of work. So that's why I say it is a very interesting issue to study, whether Islamic banks are actually charging more than that. And if they're charging more than that, are they actually dispersing it to charity? This is just to discourage, I guess discourage banks from taking advantage for for non-payment or late payment. The other thing is that sometimes customers, if you don't charge this penalty, they take advantage. So they say, oh, Islamic banks, we pay last, because for them, they only charge 1%. So that's the other thing. But sometimes it works to the advantage of Islamic banks, because a lot of customers will be going for Islamic banks if their penalty, the late payment is very minimal, right? So that's the thing. I'm not sure if I've answered your question, but is that Noraini?
Yes.
Yeah, from Maliah. Sorry, if I can add a bit on your response. Is it okay that from Maliah?
Sure. Yeah, I think I need you to answer that. Yeah.
No, I think you are right to say that in the Islamic banks at the moment there's no penalty being charged. So actually what happened in the industry also, most of the Islamic banks are just charging that 1%, the compensation to cover the loss due to the non-payment. So in fact, I think when they put in the agreement as well, if I can also give some example, they will put the takwid 1% and garamah 0%. So mean that there's no garamah to be charged for the financing to the customers. And yeah, I think the reason why we have this 1% also maybe to give some seriousness to the customers to pay their installment on time. If you don't have any charge, I think that will also, the customer are free, will not pay on time because we didn't give them some additional charges to pay. So that's just the 1% required by Bank Negara to be part of the revenue of the Islamic bank. Okay.
Yeah. Thanks a lot, Dr. Noraini.
Is from brother or sister Habibu Yunus. What is the legal basis under the Islamic law for the late payment charges?
Legal basis for Islamic law? No, can you answer?
The late payment can be scot-free.
No, I think if I can, I'm not able to answer from the legal perspective. I think the legal person will be able to answer that better. But I think from the general perspective, I think as I mentioned earlier, this, not the penalty, this actually the compensation. Because under late payment charges, under Bank Negara, as mentioned by Prof. Maliah earlier, there are two components. The first one actually the compensation, which is the takwid 1%. And the second one is the garamah, which is the in addition to that 1%. Okay? So when it comes to takwid, I think there's no, it's not, I don't think the legal will argue on that because that is actually to cover the loss. So when customer default, then normally the Islamic bank will have to incur additional costs. There's a lot of additional costs to also cover when customer default. For example, they have to give the reminders, they also have to get the lawyers and etc. etc. So that actually the 1% that allowed by Bank Negara, but that can be earned as revenue of the Islamic banks. I think when talk about this late payment charges, whether legal basis allow or not, I think the 1% should not be an issue. Maybe the additional for the garamah, then they have to be very careful and not to overcharge, or maybe not to charge at all.
But I think right now what Islamic banks are doing, I have a feeling, is looking at the other conventional banks. If conventional banks are charging 5%, so perhaps they will charge just 4%. Still an advantage. And then to me, if I were Islamic bank, I would charge that 4%. Why? Because 3% I can give to the charities of my choice. So therefore, I think that the relationship, with the ummah would be better, because you're collecting and then giving it to the needy. So, but I think banks are not keen to do that because there's a lot of work involved. Yeah. So that's the other thing.
And there's one question from Brother Tayyab Usmani. Can charity be forcibly? Can we force for charity? This is loaded question.
Can
we force someone to do charity?
When they charge 3% and 1% with 3%, if you were to ask them, do you actually give to charity? I mean, by right they should, but whether they give, I'm not sure. Again, that is subject for a study, because you collect, but do you actually give, and how much do you collect?
But Prof, from the Sharia, I mean, if they're having the Sharia committee,
yeah, of course.
The committee will ensure that the late payment, I mean, the amount to be channeled to charity, otherwise that becomes Sharia non-compliance in that particular institution.
Okay.
That's right.
So that means they must lah. That means does the Sharia committee actually ask how much actually you collected? 2 million? Did you distribute 2 million? Did Sharia committee members do that?
I think
this is for you.
I'm not sure in other banks, but in my bank, what we have done, I think we really, because when we look into the agreement, the contract will mention whether there is a garama or ta'wid there. Happen in the bank that I see as the Sharia committee member, we don't charge any garama, so there's no need to channel anything to charity. But I'm not sure other banks, Prof. So maybe other banks we need to check lah. Maybe to also do some research on that.
Yeah, I think research on that will be very good, because that gives an idea. And again, whether the banks would divulge such information, that's another issue also. Because who would want to tell you that they have actually taken that money and didn't give it to charity? So a lot of sensitive issues, but yeah.
Okay, this is from Sister Noor. I come from an IFRS jurisdiction. I noticed you spoke about the application of IFRS 16 to Ijara. Kindly also speak about the application of IFRS 9 to Islamic finance.
That one is Dr. No. Yeah, actually for Murabaha, you talk about sales. Does it come under IFRS 15? It doesn't, actually. So most advances and financing of Islamic banks come under IFRS 9. I think Dr. No has also mentioned last week about IFRS 9. So maybe Dr. No, you want to recap on what IFRS 9 talks about?
Actually very technical for this IFRS 9 to really discuss in this session, but just for I mean, in general, when we talk about the Murabah financing or even Ijara financing, this is still under MFRS 9 or IFRS 9 rather than the standard on revenue recognition or the standard on leasing, because I think the nature of this particular transaction is still financing to the customers. So that meet the definition of financial instruments under IFRS 9. So I think what Islamic Bank will do is to measure at amortized costs for all the financing year, and then maybe to also provide the impairment. I think that will be all the details under 9 also applicable to all these financings. Okay. We need another, session for just IFRS 9 for Islamic finance, because very detailed coverage for that.
But Sister No, I think if you go on the Malaysian Institute of Accountants website, there is a book. There is a book that was written by a few authors. Dr. Noraini and I were also the contributors of that book. It is free. It is online and it is free, and it tells you how MFRS 9 is applied to Islamic financial products. Yeah, it's accounting for Islamic finance, something like that. You just go to the MIA website, you download it. It's free.
The last one from Brother Samsul. In Indonesia, Sharia Advisory Council (SAC) permits Murabaha Wakilah, that the Islamic bank delegate the customer to buy the object of contract. How about the issue of Murabaha Wakilah in Malaysia?
Murabaha, sorry, again.
Murabahah wakilah.
Murabahah, that one Dr. No can answer lah. No, wakilah, murabaha wakilah. Wakil, no?
I'm not sure because I mean, it's
We
very.
don't have that product, huh? No?
Yeah, we don't have that product in Malaysia. I need, to consult the Sharia scholar for this. I'm not able to give any opinion. I'm worried that my opinion will be not right. So I think, to be fair, I'm not able to really answer because we only have the normal murabaha and also the tawarruk. So this murabah wakilah may be applicable. Is it in Indonesia, right? Yeah, that's actually Indonesian.
Maybe that brother can explain to us what you do, that murabaha wakilah. To me, it's like wakil, something like wakil.
Yeah, wakil like agent. So there's agent.
Okay, we defer next week then for this case.
Okay, yeah. All right. Okay.
So you have the expert who's familiar with it, so inshallah.
Yeah.
Okay, Prof, a final word for tonight. Yeah.
Oh, just thank you very much. And then I hope whatever little that we have discussed, it is beneficial to some of you who are just new to this Islamic financial products. And then, yeah, thank you very much.
Thank you so much. Thank you so much. It's interesting to know that our late payment become a charity.
Yes. Okay.
Okay then everyone. Thank you, Prof. Thank you, Prof.
Yeah, thanks.
Noraini. Thank you everyone. Assalamualaikum warahmatullahi wabarakatuh.